Okay class, so let us continue on tutorial for partnership topic. Please refer to July 2021. So we are going to discuss question number 1. As usual, for partnership you have two types of question. One is on the theory and the other one is on the computation. Okay, so let's start on the theory question. Okay, you will be given, as usual, a statement here. What you need to do is that you need to know the requirement. So based on the statement here, we have three partners, Mariam, Fitri. They were friends since undergraduate from a University of Scotland. After meeting up at reunion event before MCO in Malaysia in 2020, they have come out an idea to set up a partnership business selling kitchenette merchandise through online. However, before they proceed further, they are seeking your help to explain the advantages of the partnership. So actually, we are required to identify the advantages of partnership. So you are required to list 4 advantages of partnership and you will get 4 marks. So what you need to do, you just have to give the advantages. So the advantages, you can choose any of the advantages down here. Okay, you can talk about the amount of capital to be contributed. Since you have more partners, so you will have more capital. And then in terms of the expertise and skills, okay, what else? In terms of the management, okay, since we have more partners, right? So you can save time compared to when you are handling one-man show during sole proprietor and other else. Okay. Let's go to computation. Can we go to computation? So based on the question here, okay, you can actually identify the stage of the partnership. So straight away, we look at the question here. You are required to answer all of this. Okay, when you see that you are required to prepare for the goodwill and remuneration, so you know that this question tested on changes. Another things, the hint here is you are required to prepare the appropriation statement showing the pre and post period. So changes during the year. Changes during the year. Or else you can go the normal way. Okay, first, okay, when you get the question, first is to identify what class? Remember, what are the information to be extracted? Number 1, yes, number 1 is the accounting period. Then, the partnership agreement. What else? The phase of the partnership. So here we have changes, and the changes happen during the year. Okay, so when we talk about changes, there might be additional of partner join the business or old partner leaving the partnership. Okay, so let us start preparing the goodwill account. So let us find any information regarding the goodwill. Is there any information regarding goodwill, class? Which one? Number 2. Okay, let us look at number 2. On the same day, Farah was admitted into the partnership contributing 50,000 cash as capital and 20,000 for her share of goodwill. Okay, so you have information for goodwill here. Do you have any other information? No, and the goodwill will not to be maintained in the book. Okay, this is the normal procedure. Okay, do you have any other information on goodwill? No, right? So meaning that you cannot use accounting profit, you cannot use super profit. So you are going to use the ratio method. So as ratio method, recall what you have learned. You will calculate based on the profit sharing show. So who are the partner? Ahmad, Seri, Jarrah. But during the year ended, okay, this transaction took place. So one of the transaction is that Jarrah decided to retire from the partnership on 31st August. On the same day, Farah was admitted. So now your partners, the remaining partners in the business are who? Ahmad, Seri, and Farah. So based on the new partnership, okay, the profit and loss sharing ratio has changed to new ratio. Ahmad, Seri, and Farah at 2:1. So based on the ratio, can you find the total of goodwill, class? Okay, if Farah brings 20,000 where her portion is 1, so how much the total of 5? How much, class? 100,000. Okay, this one will be 40,000, right? 40,000, so in total 100,000. So as usual, open the goodwill account. How to open the goodwill account, class? We start with debit or credit? Very good. So we start with debit side. Open the goodwill account. Okay. The total is 100. So you will divide to the all partner. Nampak? All profit sharing ratio. So these are the all partner. And then you will transfer to credit side because we are not going to maintain the account, right? So you will transfer the asset to the new partner. So the new partner will take at their profit sharing ratio. And this amount, don't forget, okay, you will record in the next double entry to the partner's capital statement. So based on the question, you are required to open the capital statement but only for Jarrah. So this is the same concept as February 2022. So you can open the account simultaneously, concurrently. So open the capital statement and bring down the value of goodwill. And don't forget, of course, you must start with the balance brought down. Okay, done with the goodwill. Okay, can we continue to the revaluation account? Okay, so now let us look for the information on revaluation. Okay, based on additional information number 4, this time, okay, the asset were revalued, but there was a deficit. What do you mean by deficit, class? Yes, there is a loss on revaluation. So straight away, open the revaluation account. You start with the deficit. Deficit is on the debit side. So you will close, okay, by credit the revaluation account. So when you credit the revaluation account, you will debit the partner's capital. Debit partner's capital meaning what? You still remember? If credit, you add, right? If debit meaning, you have to less. So in the partner's capital later on, okay, you will less the portion of loss on revaluation, okay, for the old partner. Okay, so Jarrah, since we only concentrate on Jarrah, so let us look how to record the portion for Jarrah. So nampak dekat mana it appear? At this section, you have to what? Less. Why you less? Because it's a loss. Deficit is also named as a loss, surplus similar as profit. Okay, done. We are done with the revaluation. Okay, can we move to the appropriation statement? Okay, since you have changes during the year, firstly identify what, class? Identify the pre and post period. Okay, so you need to know first the accounting period. You need to know the accounting period. When does it start, the business? When does it start? 1st January, ends on 31st December. When the changes happen? 31st August. Similar. Right. So the pre-period will be 8 months and the post-period will be 4 months. So you will break down the timing for the appropriation statement as follow. Okay, pre-period 8 months, post-period 4 months. Don't forget the title, of course. So we start as usual with the net profit. How much is the net profit? Net profit is given in the question. Okay, in additional information number 6, 150,000. It was assumed to be accrued evenly. So you prorate to 8 months and 4 months as follow. Right? And then continue to adjust for any interest on drawing, interest on capital and salary. So how to find out whether there is adjustment on this transaction? Go back to question and find the partnership agreement. Can you find the partnership agreement during pre? Okay, I will use pink color to differentiate. So during pre, okay, you have agreement regarding the profit and loss ratio in 5 to 3 to 2. And then you will have interest on drawing at 10% per annum. Interest on capital at 5% per annum. And salaries 1,000 per month for Ahmad and Seri only. Okay, so you have all right, interest on drawing, interest on capital, and salary. So how to identify to calculate the interest on drawing? You need to find out who made the drawing. Who made the drawing, class? Okay, drawings information in additional information number 5. There are 2 partners who made the drawing, Ahmad and Farah. Okay, Ahmad made during pre-period and Farah made drawing during post-period. Okay, so you calculate the interest on drawing for Ahmad during pre-period. Farah later on, when we prepare for post-period, we will calculate for Farah. Okay, next is to calculate the interest on capital. Okay, very simple. Look for the balance of capital. So interest on capital is to be given at 5%. And usually we will base on the balance here. We will base on the opening balance here. So you calculate for interest on drawing, okay, based on this balance. Okay, so look for the amount. These are the amount. Don't forget to prorate to 8 months only. Last but not least is the salaries. Who are entitled for the salaries? Ahmad and Seri. Ahmad and Seri are partners during pre-period, right? So you calculate for 1,000 per month since you are capitalizing for 8 months. Alright, so you will times with 8. Okay, those in the pink color is highlighted for pre. This is for working for pre. Is that clear, class? The pink color is for pre-period. That's how you differentiate. Okay, so at the end, you will have a profit of 71,734 for pre-period. And you will divide to the partners who are still in the partnership for the pre-period. Who are they? Ahmad, Seri, and Jarrah, based on their own profit share ratio. And don't forget, this amount will be transferred to where? Partner's current statement. So, you may update the current statement for Jarrah. Okay, add up all this amount. Okay, as usual, start with the balance breakdown. Add for interest on capital, profit sharing. Okay, Jarrah is not entitled for salary, so there is no amount for salary. Okay, so this is part 1. Later on, I will continue for part 2, discussion for post period.